One report indicated that as much as $10 billion of customer funds may have been misappropriated and lent from the FTX exchanges to his personal hedge fund, Alameda Capital. And if that's true, and that money's gone, this is a scandal that will dwarf Bernie Madoff or John Corzine at MF Global. This is a real big deal. And now you have all of this contagion. There's all the other exchanges and the cryptocurrencies really just going through a major wipeout. But again, unlike in 0809, there's no Ben Bernanke to step in and socialize the losses here. Big and small, there's going to be an awful lot of losses. And I believe this is just beginning. This is going to be a very big story in the days and weeks and maybe even months ahead.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for November 8th through 15th, 2022, while supplies last. This week we've secured a shipment of backdated silver maples, including full mint-sealed monster boxes from years prior to 2022, and they are available at $8.50 over spot. The silver maple, made by the Royal Canadian Mint, is 4/9 fine and was the first bullion coin minted to that exemplary purity. They are one of the most recognized bullion coins in the world and come in tubes of 25 and boxes of 500. Again, we have them at $8.50 over spot while this special lasts. Finally, the Canadian silver maple is IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. And we're available after hours and on weekends. And we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg, the #1 financial contributor on Substack. Doomberg, thank you so much for joining us today.
Elijah, it's great. Great to be back. And every time I hear that, it's sort of, you have to pinch yourself. But yeah, indeed, great to be back and looking forward to another robust discussion with you.
Our last interviews got a lot of praise from the viewers, so we just had to have you back on, and we got a whole bunch of viewers' questions here. So that really just shows the eagerness our viewers, are awaiting your appearance again. So thank you so much. The first topics I'd like to discuss, we have a couple of viewers' questions about this. The gold and silver markets, we've seen quite a bit of a rally in the last week and a half. Your perspective on this, do you think the short-term rally will continue, or is it just a short-term rally? Is it are we gonna see a pullback from here?
So obviously it's a complicated question, and there's a lot of flows in precious metals, and I'm sure we'll get into the dollar and so on. But what's happened this week? Obviously, the market reacted as though the relatively low CPI print of 7.7% was indicative of a potential Fed pivot. Perhaps sooner than the market was pricing. And so what we've seen since that day, the markets were up something like, I think 7%. The NASDAQ was up. It's just sort of a crazy, really feels like a bear market rally, if we're being totally honest with you. But, we're not traders. And so we leave the technical analysis to others. But we saw a collapse in the 2-year yields, trading now down to 4.3%. From much more elevated levels prior to that CPI print, somewhere around 4.7, I believe, if memory serves, and a weakening of the US dollar. And generally speaking, that has been a bullish tailwind for gold. A potential contributing factor, I think, and we could also get into this perhaps now or in response to other questions, has been this wipeout in the crypto space and the collapse of the crypto exchange FTX and SBF's associated hedge fund, Alameda Capital. And so, there's been lots of pretenders to the title of best store of value. I think gold in particular has 5,000 years of evidence, and we're seeing on a relative strength basis, ultimately it's going to take a lot more to dislodge gold as the ultimate preserver of purchasing power and store of value. And so I think those combination of factors, in a time of crisis, gold is considered perhaps a safe haven. Now, in a real crisis, correlations go to 1 and people sell what they can, not what they want to. And so that's why you see gold sell off sometimes in a true market panic. But given the euphoria of the relatively soft CPI print, the market repricing, the timing of a pivot, and this crypto collapse. I think though you mix those three things together, and it's probably pretty favorable for gold. Now, whether it lasts is a whole different story. If this is truly a bear market rally and the Fed continues on its hiking cycle, then we shall see perhaps a different outcome. But yeah, it's been a fascinating week, certainly in the precious metal space. It
has been a fascinating week, and we're also seeing a huge pullback in cryptocurrencies, which is interesting because typically cryptocurrencies are seen as like an alternative currency. So if the dollar is falling, you'd expect possibly cryptocurrencies to be rising. But it seems like we're seeing a move away from cryptocurrencies and into gold. Your perspective on all that?
Yeah, so what we're seeing right now play out in the crypto space is truly remarkable. We're working on a piece right now, but it's been difficult to write it because the news flow has been so crazy, and one crazy story after another. But the closest analogy that I would give for your viewers is we are running a repeat of the 2008-2009 financial crisis in the crypto world, but without the central bankers as lenders of last resort. And so we are going to see the full effect of contagion. It's very difficult to articulate to those who don't have as much knowledge or experience of the crypto world just how systemic the collapse of FTX is. It's a truly, and the way it went about, the way it went down on Twitter was just really amazing. The analogy I would say is, the person who leads Binance, which is FTX's biggest competitor. Binance is probably the largest crypto exchange in the world. FTX was really fast growing. He basically went on Twitter and all but sparked a bank run on FTX. The equivalent of Jamie Dimon going on CNBC and questioning the solvency of Bank of America. Like it really is remarkable that this happened on Twitter in real time. A panic ensued. And now, of course, we're starting to see some very bad signs about what potentially might have been going on there, and just how, the potential misappropriation of customer deposits, and millions of innocent victims are going to be locked up in complex bankruptcy proceedings, their funds inaccessible. This is truly a devastating blow. We're talking about large sums of money. So one report from, I believe it was Dow Jones or Wall Street Journal, indicated that as much as $10 billion of customer funds may have been misappropriated and lent from the FTX exchanges to his personal hedge fund, Alameda Capital. And if that's true, and that money's gone, this is a scandal that will dwarf Bernie Madoff or John Corzine at MF Global. This is a real big deal. And now we have all of this contagion. There's all the other exchanges, and the cryptocurrency is really just going through a major wipeout. But again, unlike in 08-09, there's no Ben Bernanke to step in and socialize the losses here. And big and small, there's going to be an awful lot of losses. And I believe this is just beginning. This is going to be a very big story in the days and weeks and maybe even months ahead.
It seems like the narrative has been, at least for some people, that cryptocurrency is kind of it's a digital gold, right? And gold is something that's secure. It never, falls to zero. It's money. It's the safe haven. But if cryptocurrencies have all these issues with them, where you have a huge exchange and your funds can be, misappropriated, or your funds can just seize up, what kind of security does crypto actually give?
So to be fair, I think we should separate and draw a distinction between crypto and Bitcoin. Now, the Bitcoin proponents would say that Bitcoin is digital gold, and Bitcoin does have a lot of attributes that I think are attractive to people who would be of the Austrian School of Economics mindset and perhaps view gold as something worth owning. Crypto is a whole different universe, and what's going on right now is it could drag down Bitcoin, and it has dragged down the price of Bitcoin this week as people sell off, what they can sell as opposed to what they would want to sell. But Bitcoin is a different beast, and I do think it's a separate and distinct beast, not the least of which because the U.S. government has declared it as an asset, and there's very clear tax reporting and accounting rules around how to mark your gains and pay your taxes. And so, Bitcoin has some other attributes like a guaranteed limited supply and all the other things that the Bitcoin maximalists would argue make it a form of digital gold. The complete collapse in crypto has very little to do with Bitcoin. and but still could be systemic. And so that's why I'm wondering whether the sort of flight to quality that we're seeing both into sort of T-bills and gold as interest rates come down, and as gold is spiking almost like $150 this week. It's been a pretty remarkable week, couple weeks. And so, yeah, there's things to watch over there, but crypto is definitely different than Bitcoin. And I didn't want any of my Bitcoin friends, because we have many Bitcoin maximalists who are subscribers to Doomberg, to get annoyed with me for lumping them in with the rest of the crypto grift that we're seeing. But there's an awful lot of grift, it seems, in the crypto universe, and it's measured in the tens of billions. And that's a pretty big deal.
I did want to transition now to talk a bit more about the US dollar move we saw this week, because it was a pretty dramatic move down there. Can you expand on what really caused this possibly popping of the bubble? Do you think that's what it is? Or do you think it's just kind of a blip and we're moving higher from here in the dollar?
So the move in the dollar, it depends how you measure it, of course, but the standard way to measure it is through the DXY, and that's a pretty substantial move. Look, I think these are all different sides of the same coin, right? I mean, the market was surprised, and some of the commentary out of Fed officials after the CPI print seemed to throw a little bit of fuel on that fire. And so, yeah, and by the way, this was, of course, a very crowded trade. This is why bear market rallies are often very violent. They're called face rippers in the short seller community for a reason. And because if everyone's on one side of the ship, if consensus thinking is that the DXY is going to go to 120 or 125 and everyone is positioned that way, then at the first sign of an unexpected print that goes against you, everybody tries to rush to the door at the same time. And so I would wait and see. Let's see what happens, with the Fed. If they do, pivot, then you could expect that, that perhaps markets will rally, risk assets would be in favor again, and so on and so on. And so you saw a very violent overreaction. Some of that had to be short covering, and people caught off sides in the market. Just reason number 2,000 why we don't trade day to day. It's just impossible to time, and it's very easy to get caught off sides here, like many did. Now, but these are all related. DXY collapsing and gold spiking are basically the same trade, and inflation coming in not as hot as feared, and interest rates declining. This is all sort of there are periods of time in the markets where assets trade either directly correlated or directly anti-correlated until the model shifts and people's thinking shifts. But for now, gold and interest rates are taking their cues from inflation and what the Fed says, and that's just the way the market is trading today.
It does seem kind of like a backwards world, because if inflation is leveling off, which it probably isn't, I mean, it's still pretty high according to the CPI, but it seems like if inflation is leveling off, that should be bearish for gold and bullish for the dollar. But it seems like we're just in an upside down world right now. Well,
you have to remember that you and I are talking about the price of gold in US dollars. And so, and the US dollar isn't sitting in isolation in the world. And the attractiveness of the US dollar, ebbs and flows based on what the market believes the Fed will do. And at its core, what happened this week is the market shifted in its deeply consensus and widely held view of what the Fed would do. And when that happens, you see a repricing. Now, this becomes the new consensus. And predicting what the Fed will do and say is very challenging. But if the Fed does and says the opposite of what the market repriced it to do, then you could expect these prices to reverse. And if the Fed continues to do what the market hopes it does, then you could expect this trend to continue. It really is just that simple. I know, like, good news is bad news. Bad news is good news. It all really is literally right now, the market is taking its cues from what the Federal Reserve is saying and doing, which is a very bizarre thing, but not bizarre. It's a rather curious aspect of the way markets trade today, but it is reality, and you got to play the pieces as they are on the board. But as we've mentioned before, I think, to us, the price of gold, as quoted in US dollars on a day-to-day basis, is not super interesting to us. We measure the amount of gold we have in ounces, not in dollar value.
And I think having that perspective is so important, looking at your wealth in ounces versus dollars. And I know a lot of people have pointed that out, because at the end of the day, that is the true wealth, right? Is the metal that you can hold in your hand. When it comes to it seems like a lot of countries out there are realizing that and are, taking delivery of gold. Central banks across the world are increasing their gold holdings. This is leading to a lot of speculation about possibly the BRICS nations moving to some sort of gold-backed system. We have a couple viewers' questions on that. I wanted to get your perspective on that and how it could impact the gold price going forward.
So I would toss out a milestone of a really important event for people to put on their radars, which is the upcoming trip of newly installed dictator for life, President Xi, out of China to Saudi Arabia. And I would be very mindful to observe the difference in the treatment that President Xi gets upon his arrival than perhaps President Biden was given during the famous fist bump meeting a couple of months ago. There is no BRICS, in my view. There is no sort of alternative currency backed by commodities that doesn't involve Saudi Arabia. And for Saudi Arabia to go down that path, I think has a high probability of triggering armed conflict. I want to be honest with you. This is they say, it's almost, cherry picking, or what's the word? It's flippant to say, decades happen in weeks, but it could truly be one of those moments if President Xi going to Saudi Arabia on the heels of the party Congress, where he sort of established himself as the head of the party until he passes. That's a pretty important signature moment, and for MBS to accept him, and what I suspect will happen, the pomp and ceremony that we'll see, assuming it's shown in the media over here, will be a very, very interesting indicator. If Saudi Arabia throws its lot behind this movement to get a commodity-backed currency basket where trade differences are settled, perhaps even in gold, there's been plenty of organizations, countries, groups of people who have tried to do this in the past several decades, and none of it has really come to pass. The world is still U.S. dollar dominated. Energy, in particular, is dominated by the need to close your transactions in U.S. dollars. This would be a very interesting moment if Saudi Arabia truly turns away from the U.S. in ways that matter. I would suspect that we would end up seeing some armed conflict in the Middle East, and it could get ugly.
And the reason for that is because Saudi Arabia has been siding with the U.S. dollar, has been using the U.S. dollar, but now that movement away would just produce a lot of conflict. That's what you're saying?
Yeah, well, the trade has always been the U.S. will defend the House of Saud, and in return, oil shall be settled in U.S. dollars. I don't think that's a controversial thing to say. I think we happen to think the petrodollar system is, quote, real, and deals were cut. And we have certainly defended Saudi Arabia, even post 9/11, with all the controversies attached to that unfortunate tragedy. Those acts of terrorism, I should characterize them correctly. And so the fact that our military relationship with Saudi Arabia persisted even through 9/11 tells you the depths of the importance of it. And we wrote a piece on this, of course, called Listen, Jack, where we highlighted that the personal animosity between President Biden and MBS risks severe geopolitical consequences. And it would be a shame if the sort of personal animosity between two people leads to sustained conflict. I do think that the U.S. dollar hegemony and the U.S. dollar, the petrodollar system, is something that the U.S. has historically been willing to fight for. And the U.S. military is sort of the global police of trade. All that, of course, has changed in the last few years, driven a lot by what Donald Trump did in his effort to sort of to roll back some of the sort of what he considered freeloading. The countries were benefiting from the U.S. military ensuring free and fair trade, and the U.S. was bearing all of the cost in his mind. And so with the pullback of the U.S. Navy, let's say, out of the Middle East, it just for some reason, let's call it a hunch, I think that depending on how the meeting goes between the head of China and the Crown Prince of Saudi Arabia, we could be heading into a period of significant, let's call it friction.
Now, if the BRICS nations or BRICS Plus with Saudi Arabia do move on to some sort of gold-backed system, do you see that impacting the value of gold?
Well, what is the value of something? The value of something is what somebody else is willing to pay for it. Perhaps the value of something is the discounted free cash flows that you might anticipate in the future. You don't have that here with gold. The value of gold is what the stock market tells us it is in the form of GLD or the Sprott Physical Trust and its trading hands. Supply and demand of those shares could dictate the price of gold. So imagine that the BRICS countries set up their own gold system, and they have their own gold trading market, and they value gold at a certain price, and that price is different than what the traders in New York and London tell us the price is. Well, then what is the value of gold? So it could set up a circumstance where to the people in the BRICS system, gold is very, very valuable. And so they trade it amongst themselves. And then if there's arbitrage between the two worlds, which presumably there would be, then maybe that would elevate the price of gold as traded in New York and in London. But it's not necessarily clear to me that would happen. There are scenarios where if arbitrage is made sufficiently difficult by U.S. sanctions, for example, or they just made it illegal to own physical gold, which they've done in the past, you could see disparities in the price of gold, a black market price for gold, and then an on-the-books price of gold, and the IRS, and it could get complicated very quickly. So I wouldn't necessarily be of the mind that the setting up of a BRICS system to oppose the U.S. dollar, where gold is used to settle trade differences, is necessarily a priori positive for the price of gold that most Western investors could expect to get for it if they ever chose to sell it. I think it would be, but I could be convinced otherwise. And the government has a lot of power, as you know. I mean, and so we shall see. But I would say that I do not expect the U.S. to just take an aggressive move away from the U.S. dollar sitting down, and that's why I'm sort of a little bit concerned about what happens when President Xi goes and lands in Saudi Arabia. Again, the fact that he is taking this as his first major trip after the 20th Congress is, I think, a very clear sign that this push is going to occur. Whether it's successful, what the consequences are, what it means for the price of gold in London or New York, very, very different questions and potentially different answers. But for sure, something historic seems to be afoot, and it is worth everybody's attention to pay be very mindful of what's going on. Look at the signs and the cues. Don't necessarily listen to what's being told to you by sort of traditional media outlets. Find out for yourself. It's going to be a fascinating couple of months for sure.
Will be very important to keep an eye on that, as you mentioned. I did want to discuss now energy across the world, but first in the U.S. here, we have a couple viewers asking about the diesel shortage. We've heard that the diesel reserves are being depleted. Your perspective, is there a major concern here in the U.S., or is this fake news? We have Jake and Charles asking this question.
Yeah, it depends on where in the U.S. you live. So if you happen to live in the U.S. Northeast, this is a real crisis. And like Europe, you are effectively gambling on a mild winter. So let's take a step back and talk about what's really going on here. There's a diesel crisis predominantly in the Northeast for several reasons. I'll list the top three. One, the region, because of a variety of reasons, including environmental activism, no longer has the refining capacity that it used to have, and I would argue has insufficient refining capacity to meet its needs, which necessitates significant imports. So that's one. That region has shut down refining capacity at scale that matters, and to fill the hole that the lack of domestic refining has created, they have turned to, pick your favorite, Russia, China, exporters of finished products. The second challenge for the Northeast is an antiquated artifact of U.S. law called the Jones Act. which I'm sure you're familiar with, but for the benefit of your viewers, I will give a brief explanation of what the Jones Act is. The Jones Act is a law that was put in the books after World War I, so 100 years ago, that was meant to protect the U.S. merchant marine fleet, that the Department of Defense thought it was in the country's national security interest to have essentially a subsidized U.S. merchant marine fleet. So the Jones Act essentially prohibits foreign-owned, foreign-flagged, foreign-staffed ships of any kind from picking up product at one U.S. port for delivery at another U.S. port. And the U.S. doesn't have any tankers, basically, for finished products. And so despite having healthy and robust refining capacity along the Gulf Coast of Mexico, no tanker can pick up diesel from Houston and deliver it to Boston. And so that is another challenge, for sure. And then, beyond that, the Northeast has this other problem, which is as a consequence of union pressure and sort of, I would just say, logistical momentum. Many, many homes in the Northeast are heated in the winter using heating oil. But in reality, heating oil is nothing more than a dyed version of diesel. It's dyed for tax purposes because there's different tax treatment for diesel fuel that you'll burn in a truck versus diesel fuel that you will burn to heat your homes in the winter. But because many of the homes in the Northeast are still heated by heating oil, the impact of this lack of refining in the Jones Act is even more exacerbated because heating oil is even more inelastic in a sense than diesel for trucks, because if you can't heat your home, you're literally jeopardizing the health and well-being of your family. And so those three factors combine to create a real potential crisis. The inventory of diesel / heating oil in the Northeast is dangerously low, historically low, well outside of the sort of 5-year average and high-low chart, sort of seasonal chart that you can produce on Bloomberg. And that's a real crisis. And if we have a serious and prolonged cold snap in the Northeast, things could get hairy pretty quickly. And again, we've been railing on this for a long time. If you don't invest in the infrastructure you need for primary energy, you become susceptible to these types of things. Now, the weather so far has been pretty mild, but if you look at the 2-week forecast for Boston, starting sort of Monday or Tuesday of next week, you begin to see average daily highs below the average daily high, historical numbers, and lows below the average historical low numbers. And it's not like a cold snap, but if winter is tough in the Northeast, we could see a serious problem. And this is something we wrote about all the way back last October. I think the title of the piece literally was New England is an energy crisis waiting to happen. And it is. And so let's hope and pray that this isn't the year that it happens. But at the same time, let's also hope and pray that if we avoid a crisis year because of the luck of the weather, that doesn't necessarily mean that our political leaders don't get wise about what needs to be done to serve the population, because I don't live in the Northeast. The Northeast is taking a serious gamble on the weather right now. And let's just pray that it stays warm.
And what are the ways that viewers who, for example, live in the Northeast right now can start preparing now? Because as you mentioned, we don't want to just, let this be a roll of the dice. Oh, we're going to freeze this winter. We're not, we want to be prepared for either scenario.
Well, as we've discussed in the past, I think preparedness starts at home. And then from there, friends, family, church, community, work your way outward. I'm a proud prepper. I think many people view prepper as a derogatory term. I don't. I proudly do what I can to make sure that I manage to take care of my home first, my wife and my children, and then my friends after that, and then the broader community after that, in that order. There's no shame in that. I think that the shame is in not doing that and expecting the government to take care of you. It's who I am as a person, and I suspect you probably have a similar mindset. And so I would just run the thought experiments of what if diesel isn't available? How would I heat my home? If electricity goes out, because the grid is also, pretty unstable up there for a variety of reasons that we've written about, I wouldn't panic. I think preparedness does a lot to dissipate panic. But if you run a few scenarios, then maybe increase the working capital of your home and the things that you need to maintain the quality of living that you aspire to provide for your family, then you will be well ahead of the crowd. Most people are totally ill prepared, don't have excess inventory of food and firewood or warm clothes. They just think that light switches turn on lights, and the panel that controls the furnace is what dictates how hot your home will be. That's just not the way the world works, especially in a shortage. But I wouldn't panic, but I would be prepared. I'd be mindful. I would watch the weather. I would develop plans, if A, then B, and so that you are reacting from a position of knowledge and confidence and strength, as opposed to reacting out of fear and unpreparedness.
So we have a very detailed question from a viewer. So I think I'm just going to read it here. It's from Bill. He wants to know, how do you picture the European economy breaking down this winter and into next? Europe was in a lockdown for a long time before this. Is it possible the lockdown mixed with shutting down the European economies in the winter time causes a serious crisis in the bond market or for GDP?
So it's a great question. Europe as well has been blessed by an extraordinarily mild November. And because of that, the frenzy of prices that we saw in natural gas in Europe have come down substantially off their highs, and that's good. Europe has also done a very good job of being the market clearing price for liquefied natural gas and storing as much of it as it can. So those are great events. Now, again, they gambled on the weather, and so far they have won. But the damage to the European economy in general and Germany's economy in particular, is that as part of their conservation process, they have essentially decided, and I suppose correctly, to prioritize civilian demand for energy over industrial demand for energy. So you're seeing firms like BASF pull out of, shut down, minimize their European operations. You're seeing, centuries-old family-owned businesses shutting down because they're insolvent, because they can't afford the electricity and the natural gas prices to keep running. And so I do believe that we're going to see a rather significant economic contraction in Europe. Now, if December is, bone-chillingly cold, you could go from very quickly from an economic crisis to a more humanitarian one, and let's all again pray that doesn't happen. But that risk is still on the board. But what comes out of this is probably another tough winter, and then I think Europe is pretty okay. If you look at the forward curves of natural gas, things begin to equilibrate in the winter of 2024. That would make sense as the world builds out a massive amount of LNG export and import capacity. And the big wild card in this, of course, is if whether we could get to a peaceful resolution in the war between Russia and Ukraine. That too is a wild card. If it escalates, that's negative, and if peace were to, by some miracle, peace were to be able to break out in between the warring parties, that would be very bullish. So it would decrease the down case risk that we might be projecting for Europe. But it is difficult to see from here, with natural gas still trading at $30 per million BTU in Europe today, which is roughly 5 times what it costs in the US. It's difficult to see how at least meaningful deindustrialization of Europe isn't on the board here in the next 18 to 24 months.
All right. Well, Doomberg, we'll have to leave it with that. Thank you so much for joining us today. If our viewers are interested in learning more, they can go to your Substack Doomberg website, which will be in the description of this video, the #1 financial contributor for Substack. So once again, congratulations on that title there. Any last thoughts before we let you go?
No, look, it's always great to chat with you, Elijah. Happy to come back on anytime, especially to field viewer questions. That's always fun. And, it is, as you mentioned, Doomberg.substack.com, reaching the #1 spot on finance is a true blessing that we intend to savor. It's rare in life that you can achieve true personal sovereignty to do only what you love all day and make more than enough than you need by doing that. And that's our definition of wealthy. And we have been really grateful to have been able to achieve it. We are 100% subscriber supported. And that is also a great blessing. And so it's really been an amazing run, and rest assured that we are not growth just for growth's sake. Our objective is to enjoy every minute of this, to have fun doing it, and to savor the personal sovereignty that our subscribers have bestowed upon us because of the work we've done and their belief in what we're writing about. So it's really great, and always great to come on with you.
Doomberg, once again, thank you so much for your time, and God bless.
Same.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.